So now I would like to welcome Mr. Klipin back to the stage.
Thank you, Tricia. Welcome to the late arrivals on the Auckland flight. That's awesome for you to be here. And thanks, gents, for a thought-provoking conversation. Hey, so the discussion we're going to, if you look at the day, there's lots of different things. It's almost like the buffet breakfast. You can pick and choose, and some of the sessions are going to be right on point, right in your marketplace. Other things will just be thought-provoking. But I just wanted to spend the next 20 minutes, and delighted to welcome Catherine Beard, Director of Advocacy from Business New Zealand, to talk about the NZIIS, or otherwise known as the New Zealand Income Insurance Scheme. And so the purpose of this is to just paint a little bit of a picture about what it is. I'm then going to hand it over to Catherine. Business New Zealand is one of the members of the tripartite agreement to shed some light from their perspective. And then Catherine and I have a little bit of a chat about it, but also welcome questions from the floor. So I think we all understand from that last discussion more broadly that New Zealanders are underinsured, they're under-advised. We've put some numbers around this collectively as a sector. And the NZIIS was part of the Labor Party's manifesto to kind of address the issue that when things go really south for people, particularly around redundancy, sometimes around illness and accident, that there is a role for the state to play to come in and to assist and to help. That's the underlying need that's at point here, and I'm sure Catherine will flesh that out a little bit. But the NZIIS then drives from that idea. How do we help New Zealanders at their time of greatest need? And so the government, Business New Zealand, Council of Trade Union came together to kind of create a scheme called the NZIIS. It is about immediate financial benefit. It is about helping people back into jobs, and it is about supporting the economy. So there's a bunch of benefits that turn up at a individual level, but there's also a number of benefits that turn up at a societal level, and that's the problem that we're trying to solve. The FSC community, of course, got right in the middle of this conversation because in a sense, when you think about the problems that they're trying to solve, it's right in the heart of the life insurance space, it's right in the heart of the health insurance space, it's right in the heart of the redundancy space. All of these things are issues that the financial services sector, in particularly the life and the health insurance sectors, have been addressing as part of our core DNA forever, since we were incepted as that turned up. And so we've spent a lot of time, both at government level, now with MB, trying to unpack and understand. Let's try and understand what's the problem they're trying to solve, and have they gone through the process to actually end up at the point that we think is sensible. It's fair to say that at a headline level, we support the idea. The nub of the issue, again, if you go back to our why are we here? We're here to help New Zealanders with their financial confidence and well-being. In their time of need, in their time of greatest need, as Tony said, it's important that we collectively are there, that the community is there, that the society is there. It's about how we go ahead and do that. So we've been somewhat concerned now over a period of time. We're obviously getting a fair bit louder about it, but concerned on a number of levels. Number one is number one has been the this point around the policy being really, really rushed. So MB put out this, there was an announcement, the tripartite group had a media conference, they then launched into a consultation. All of us in the sector kind of then dove into, well, what were the details here? Let's try and really understand and unpack. And certainly from the FSC perspective, we wanted to get right in the middle of it because actually the expertise is there. So we wanted to help. We spent a lot of time with the MB team. When we stood back from it and understood the process they went through, we kind of came up with four major concerns about the NZIIS. Not the underlying idea, but the process that sat around it. The first one was it's been rushed. So really tight time frame to consult, really rushed outcomes, and what we've seen, and someone mentioned the CCCFA, when you rush policy development and you don't actually account for the unintended consequences, you end up in a world of pain, in a world of hurt that impacts people on the street. And that's not okay, not when you are driving the bus, if you will, at a government level. The second one was around lack of sector engagement. And again, there's a lot of expertise that sits around the life and the health insurance sectors. At the very least, you'd want to be sitting down and going, listen, you folks have been in this industry now for the best part of a couple of 100 years. Tell us about your experience about things like building product, how you help people back after claim time. How much time and energy does it need to get for different types of illnesses and accidents to get people back on their feet? How does all that stuff work? Because we want to factor that in because we actually want the best of breed outcomes for New Zealand. That's where we were coming from. So the lack of engagement was a concern. The scope creep was equally a concern. It started life as a redundancy program, has now morphed into life and health as well. So wanted to understand that. Of course, in the end, we're all paying for it. So this is a co-funded thing, almost like the ACC level, a levy, half by employers and half by employees. So there's an affordability issue that's right in the heart of the last conversation with rising interest rates and inflation and so on. So we wanted to understand that in terms of the timing. And then the fourth one was also the timing piece. Why would you want to consider this right in the heart of a COVID and global pandemic when we're all trying to rebalance, get our lives back in order, get back to whatever our new normal is. So this has been our now public position. I'm going to invite Catherine just to share the perspective as one of the members of the tripartite agreement, because this is now a very lively debate. In the budget a couple of weeks back, there was a bunch of money allocated to this to start funding. They introduced some legislation into the House. So this is a very live conversation. So with that as a scene set, Catherine, welcome, and thanks for joining us.
Great, thank you. Thanks, Richard. Look, it's great to be here, and it would be true to say that Business New Zealand shares some of your concerns, actually. So I'll just go and take a step back and just sort of explain how this came into being, really. So, as you know, we have a Labour government, and back in 2017, they had in their election manifesto that they wanted to address this perceived gap in the New Zealand support system for people. And so their solution was going to be compulsory redundancy. So our policy people had a look at that and judged that to be actually a really expensive option, particularly for small to medium-sized businesses. And so with that in mind, it was can we sort of work constructively with the government? And Labour governments like to work in a tripartite way, which includes unions, employers and the government. It's a three-legged stool. They tend to do that around the world. And so effectively you're kind of in the tent. So we figured if compulsory redundancy was going to be a really big burden on business and really expensive, is there another solution that would be less expensive and more acceptable? And so that's really how this came into being. New Zealand's, I think, the only country in the OECD, apart from Australia, that doesn't have some sort of redundancy support. Like at the moment, if you don't have private insurance, and of course some people do, but it's quite a small percentage, or your employer doesn't have any redundancy provisions, and again, that's kind of the big end of town, big business, then your options are actually pretty limited. So if you get made redundant and you've got any assets currently, or you've got a partner who's working, you don't get anything. So what they worry about there is there's huge pressure for that redundant worker to go and find work, and they will take anything. So you get a skills mismatch. You know, they're desperate, they might have a mortgage to pay, so they just have to take the first job that comes along. And so that's really like quite negative for a country's productivity. You've got people they may be overqualified for the job, they're getting underpaid, they get locked into that, and it takes them quite a while to get back to where they should be. So effectively you have sort of people going backwards. I think the other thing that this government particularly has been focused on, so a lot of the work we're doing in this tripartite forum is called Future of Work. And, you know, they've got a bunch of deliberate policies that they're introducing that have the potential to disrupt the future of work. So one of those is, a carbon zero future. So we are going to be transitioning out of, some traditional things into this new low carbon future. And so what's that going to do to businesses, and what's it going to do to workers, and what happens if they get displaced? And so you sort of see what's happened in Taranaki. You've had the oil and gas exploration shut down. And so that then creates a big question, well, what are they, what's going to happen to those workers? What happens if Tiwai aluminium smelters close down? So what happens if a big employer that's really important to a region closes down and you have a whole lot of people made redundant? So that's the kind of stuff that they're thinking about. Now, whether this proposal is the best solution, that's why it's here for consultation and feedback. And I think your sector is going to be really important in giving that feedback. There are some things that Business New Zealand's not very happy about in the way that this has popped out of the system, and one of those is the scope creep that you talked about. So it was never originally intended to cover health and disability, but that has been put into the mix, and as you know, that is going to significantly increase the cost of the scheme. So there's definitely some things in there that, and to your point, Richard, I think the timing is really difficult. We have come through COVID. We've got incredibly low unemployment at the moment, so people are probably thinking, well, what's the problem we're trying to fix? So the timing probably couldn't be worse. We've got inflation, and for some people this just looks like another cost being added onto them. So just for those of you that don't know the detail, I'm not going to go into it in huge detail, but it's an income insurance scheme. It'll be administered through the ACC essentially. It'll be funded by levies paid equally by employers and employees, so it's 1.39% of payroll for each. A person would get 7 months income support at 80% of their income, capped at $130,000, which I think is similar to ACC entitlements. And we basically have supported it to get it out there, to have the conversation, to get the feedback, and hopefully that will resonate with the people holding the pen. We'll certainly be giving them our feedback on scope creep and things like that. It was, and also, as you know, with these things, the devil's always in the detail, and that's, I think, where your sector will be really important in giving that feedback to the government. We would have hoped that such a scheme would be tax neutral, so we would have wanted to see some tax being reduced so that employees and employers weren't going to be paying any more to get it off the ground. There's a bunch of things that we would like to see before we would give it our 100% endorsement, but essentially it's out there for discussion. I think it's going to probably be a little bit difficult to land. There's a lot of work that still needs to go on. There's potential moral hazards. You have to try to figure out how to manage those in the scheme, and it's our guess it'll probably, if they do legislate on this, it will probably be quite close to the run-up to the next election. So that's probably enough from me. I'm not the subject matter expert at Business New Zealand. They're both internationally over at the ILO, so I'll do my best to answer any tough questions, but just great to be here and talking to you all.
So we might just have a quick fireside chat, invite questions from the floor if there are. But Catherine, thank you for that, because it's obviously been a fairly substantial issue and one of concern. I mean, from a Business New Zealand perspective, how difficult has the blowback been that's kind of turned up since the consultation's been out for discussion?
Yeah, look, it's true to say it hasn't been the most popular policy discussion to ever hit the market. And I think some of the feedback we've had is that some of the big companies have got their own schemes already. And so you wouldn't want to interfere with that or displace it. And I guess maybe there's a question mark, though, so this is where it all gets a bit tricky. So if you kind of carved out those businesses that have schemes already, is there enough kind of volume left in the whole thing to make it work?
Yeah, because there has been a lot of, both at a group level but an individual level. So if you're advising an individual client with their long-term life and health needs, income protection needs, is this on top of, is it different to, does it replicate it, would people pay twice? And so, for the people that are in that business, that's the thinking line they've been going down. At the corporate end, as you say, there are a lot of corporate schemes in place and it's part of an employee value proposition. So organisations are starting to rethink it, of course noting we're still in the consultation period. Was that kind of part of was any of that part of the lead up in the thinking in terms of where Business New Zealand came from?
Yeah, look, probably a bit difficult for me to say because I wasn't involved that closely. And in fact, I have a new role at Business New Zealand, which now means I need to be across all this stuff, but previously I didn't. So that was all kind of being worked out. I mean, my guess is, to your point, if they had consulted earlier with your sector, then that would have been really useful because that would have gone into the thinking. Because I think that is a bit of a missing piece, that if you start to slice and dice it, what are you left with? And can it still stand up on its own? Yeah. And certainly from the union point of view, they would be very loath to see, I know, for example, the dairy workers apparently have a really fantastic redundancy scheme that the unions would have negotiated years ago, and so they would be really reluctant to see that kind of thing unpicked. So, yeah. There's definitely some complexity to work through. But, like I said at the start, this government was determined to do something. Yeah. And so we kind of get in there and try to make it work, better than it would have been and have the cost a bit more shared. Like the problem with compulsory redundancy is that all the cost falls on the employer. And it also kind of puts people off, like if they needed to restructure and they've got this redundancy hanging over them, you sort of get suboptimal business outcomes. So, people would argue that partly our poor productivity is because you get locked into something.
Yeah, I mean, certainly our broader view was at the heart of this is a really good idea and a good opportunity. So we've separated out the process concerns from the idea concerns, and the idea is a good one, and that's where we want to be constructive because the expertise sits here. So, but it's a tricky road to hoe, obviously, because we're trying to navigate both the political landscape as well as the regulatory landscape.
And look, I think if you can, as a sector, come in and say, look, we get what you're trying to do and help make it better, because this might not happen this time around. We've got an election coming up. They may not get the work done in time. It may be that they're worried, and they will be worried about what it does to lower income workers, so that will feel like another tax for them. So politically, I think it could be quite a hard sell, right, in the lead up to an election. Yeah. But I think for your industry sector, you should be thinking, well, actually, if it doesn't get across the line this time, it is a gap in New Zealand's, the OECD, the international groups that look at economies and give us a tick or a cross for how we're doing, would say that we do have a gap. Yep. And so I think as an industry sector, if you could put your minds to how do we, what is the best way to fix that? And it could look like something different, but it won't be nothing. Yeah. That would be a really useful way to spend some time, in my view.
Because process-wise, as you say, this is at the budget announcement or in the budget papers, the implementation date moved from 23 to 24. A whole bunch of funding was allocated. It feels like this is in the next term of government, and we've got the National Party have a very different view of the same topic. Can you maybe just play any of those two things out?
Yeah, look, I think they would I think they would probably like to get it legislated before the election. And you know, they have a rare thing going for them at the moment, and that is in an MMP environment, they have a majority, which is really unusual for MMP. So, you know, they don't need a support partner to tick the box, and that may never happen again. So, and with that in mind, I think you would want bipartisan support for this kind of thing. The national parties definitely put a stake in the ground and said,
no,
hell no, this is a terrible idea. It's just another tax on business and employees. But there's a bit of politics in that as well, you know. So it's kind of easy to say when you're in opposition, but when you get into government, you know, I think you would want to be thinking, you know, because if you actually survey people and you say, what are your biggest fears, and Business New Zealand did a survey recently on, you know, trust issues and that kind of thing, and people's biggest fear, both here and internationally, is losing their job. You know, if you think about it, and I know that you'll have products for that, but probably they're products that only the higher income earners, you know, feel like they've got the spare money to throw at it.
Yeah. But it kind of seems, just to your earlier point around, we're at full employment. All of us in this room are struggling to find people, and the price keeps on going up. So you know, that's right now. Obviously, that's not forever, but it certainly seems the thinking at the when to do it versus what's the economic reality is in a mismatch, and so that's kind of stressing the system again, because it is finding another, whatever, the 2.68% of money to fund it. It is gearing up ACC to be shovel ready, if you will. So there's a lot of constraints to actually get this to a point, whereas caution or sense would say, do it right. If it takes longer, that's fine. But maybe it's the politics with a majority in the MMP that says we've got a once in an opportunity.
Yeah, look, and I think that would be driving them, but whether they can do the execution side of it, and, you know, we've seen that has been a little bit hard for them to land on a whole, you know, they've got a really, really ambitious agenda going on.
Massive.
If you think about it, you know, with the centralisation of the DHBs, Three Waters, tertiary, polytechnic centralisation into one big, massive single entity. So, you know, there's a hang of a lot going on. So I guess the question is this, you know, will this actually be seen through? But yeah, look, I think that would be the intention. And look, just another thought for you. Was talking to a good professor of economics at Auckland University, and he made the point that you either set these kind of schemes up and you do it in a thoughtful and, you know, maybe better way than this process has gone through, or you have a crisis. So, you know, we just had COVID and people go, oh yeah, but, you know, we've got full employment, no one lost their jobs much. But yeah, how many billions of dollars did the government throw at it? Yeah. So that was cooked up in a back room super fast, and probably a lot of that money was wasted. It wasn't very targeted. And that's what's kept us at full employment, is actually because we've just got a few more $1 billion of debt. So so his point is you pay for it one way or another.
Yeah. Yeah.
You know, you either set a scheme up that everybody can fund and it's deliberate and it's got some good parameters, and it hopefully, you know, in our view, would have been tax neutral, so it's not costing anyone more. Or you have a crisis and you get the governor of the Reserve Bank to print money and you take on debt for future generations. So
yeah, rock in a hard place. On that note, folks, it's definitely time to be in a place where the coffee is good and the croissants are good. I'm going to hand back to Tricia to close. But Catherine, thanks for making the time. Thanks for joining us. Thanks for shedding some light. And you'll be with us, I think, for morning tea if anyone's got particular questions. Awesome.
thank you.
Thank you.